what a day for the markets. I mean, they absolutely surged today. We saw a powerful bull run sending stocks soaring to brand new heights. So, the big question is, what exactly fueled this massive rally? All right, let's dive in and unpack the numbers. Okay, let's just kick things off with the number of the day, 26,200. You see, the Nifty 50 didn't just, climb today. No, it smashed through a huge psychological barrier, closing above this level for the very first time, ever. Now that is a powerful signal of some serious bullish momentum.
So yeah, the headline story today, it's pretty simple. A powerful bull run. We're talking strong, confident gains pretty much right across the board. And look, this rally really had some legs to it. I mean, it wasn't just the Nifty doing the heavy lifting. The BSE Sensex also surged by a solid 446 points. That tells you this positive feeling was spread really widely across the entire market.
And hey, if you want some real proof of the rally's underlying strength, you don't have to look any further than the banking sector. Get this, for the third day in a row, the Nifty Bank Index just smashed its own record high. You know, when the banks are performing this well, that's a massive vote of confidence in the whole economy.
All right, so what was the fuel for this fire? Let's pop the hood and look inside the engine room, so to speak, at the powerful domestic drivers behind all this.
It was really kind of like a perfect storm of positive factors, all hitting at once. First up, you had that sustained demand from the festive season, which then got this extra kick from some recent GST cuts. At the very same time, companies are reporting really strong profits, and the whole macroeconomic picture is looking pretty darn stable. Everything's just lining up. So, to put it simply, today's gains weren't just built on hype or speculation. Not at all. They were built on the really solid ground of confident consumers out there spending money and profitable companies earning it. The crucial takeaway here, the domestic story is just incredibly strong right now. But you gotta ask, right? Was this just a local story, or was there something else happening on the world stage that maybe gave our markets an extra push? Okay, let's zoom out a bit. Let's take a look at the global picture and see how international forces gave us this powerful tailwind today. Just look at this number for a second. 1,580 crore rupees. That's how much foreign portfolio investors pumped into Indian shares. And remember, these are the folks who'd been kind of cautious lately. Well, not anymore. They came roaring back today, and that is a massive vote of confidence from the global community. Now, this is really fascinating. There's a new concept driving a lot of that investment, and people are calling it the anti-AI trade. So here's the deal. Global investors are looking at the sky-high, maybe even bubbly valuations of AI stocks and other markets, and they're starting to get a little nervous. So what do? They're shifting that money to places like India, which frankly look way more attractive right now, with better valuations that are backed by the real, fundamental earnings growth we were just talking about. And there's another piece to this global puzzle. Trade. There's this growing optimism in the air about the ongoing trade talks between India and the US. The feeling is that it's going to lead to a really balanced, beneficial deal for Indian businesses. And you can bet the market is already starting to price in that good news. Okay, so we know the market was up and we've got a pretty good idea why. But let's get a little more granular now. Which parts of the market really soared? And, well, were there any that got left behind? Well, the undisputed champion of the day, hands down, was the IT sector. It surged a massive 3%. Public sector banks also had a really, really strong showing. Now, on the other end of the spectrum, the realty sector did see a tiny dip, but honestly, that was likely just a bit of minor profit-taking after the good run it's been on. And if we dig a little deeper, you can see that the strength was pretty widespread. I mean, sure, IT and banking led the charge, but we also saw some really solid gains in FMCG, defense, and capital markets, too. And here's the crucial part. The declines in media and realty were tiny. So this suggests we weren't seeing some big sell-off, but something much healthier, just a rotation of money within the market. So after a huge day like today, what's the big takeaway? What does it all mean? Let's boil it all down to what you should probably be watching as we move forward. Okay, so here's what to keep on your radar. First, keep a close eye on the banks. Their record-breaking run is a really key indicator for the health of the market. Second, pay attention to that heavy buying we're seeing in the IT sector. You gotta wonder, is this the start of a new trend? And third, while our domestic story is fantastic, you always have to keep one eye on the global picture because those macro uncertainties can shift the winds in a heartbeat. Which, leaves us with one final really big picture question. As global investors get more and more wary of those overvalued tech stocks elsewhere, and as they look over here and see our solid fundamentals and real earnings growth, are we witnessing a major shift? Could India be becoming the world's next safe bet? It's a pretty powerful thought to end on, isn't it? Thanks so much for joining me.